If you're stuck making $400 to $500 profit per trade, looking to scale up to make $1,000 profit, $2,000 profit, this is the video you have to watch. In this video, I'll break down how I built my account and scaled my account, and also how I'm taking larger trades without blowing up. Let's go straight into it. So the biggest thing you have to focus on first and foremost is building your portfolio to a large enough size so you can take trades without, over risking yourself and over leveraging yourself. I just see all these traders taking weekly contracts, they're over leveraging themselves, and then they blow up their accounts, and they're back to square one doing the same thing on repeat over and over and over. And like I said, if you want to quickly blow up your account and keep on doing the same thing over and over, feel free. I'll be here trading my capital doing the same thing like I'm doing now, and taking out lots of profits from the market. But if you want to do the same thing over and over and keep on resetting your account, depositing more money in and going through an endless cycle where you're making zero progress, go for it. But getting to the point where I am now, where I can comfortably take 15 to 20 contracts on like Tesla or something like that, it's taken nearly 3 to 4 years. I've been comfortable in my 5 contract zone for quite some time now, but this year in particular, especially since trading futures, I've taken it upon myself to start scaling my trading and start taking the next step where I can start making $1,000, $2,000 on some trades in particular. Like this past week alone on one trade on Google, I made almost $3,500 just by taking 30 contracts where it made sense and taking profits in a strong trade. But this wasn't an overnight process. This came with me getting comfortable with the account size I was and getting comfortable with the contracts I was taking. As I started slowly scaling up, 10 contracts, 15 contracts, 20 contracts, it became easier to take more trades and also start scaling my account more effectively. I can start taking more profits out the stock market and withdrawing more money. The second thing I recommend if you're looking to start scaling up your trading is using prop firms to start building your confidence and actually getting your feet in the market. So a big thing I see lots of new traders is they try to trade the stock market with $1,000 in their options account, but that's not really too beneficial and you'll end up losing lots of money and resetting, like I said, over and over and blowing up your account. The biggest thing I recommend is using a prop firm and start leveraging your capital more effectively. So if you have $1,000 in your options trading account right now and you're making zero progress and withdrawing like $300 per week, which is pretty much a minimum wage job, I recommend pulling out that $1,000, going to the futures market, buying some prop firm accounts. You can buy 4 prop firm accounts with activation fees, etc. for $800. Get some payouts from those prop firm accounts. Myself personally, I've pulled out almost $15,000 through prop firms like Top Step, etc. And that was just in 4 months alone. If you guys only have $1,000, you can get a 15x% return on your money just by investing in prop firm accounts and not get stuck in this endless cycle of trading $1,000 each week. Instead of hoping you get lucky and hit a $1,000 trade on Robinhood, you could take that money out, use that money to more effectively scale on, prop firms, get more money out. Then once you have about $10,000 to $15,000 in your stock market portfolio again, after you pull out all these, payouts from prop firms, that's when you're gonna start taking larger trades, start making more money and actually becoming profitable and having a real system as opposed to hoping you get lucky in a $1,000 Robinhood account. But that's one reason I prefer prop firms and I recommend new traders using them because you don't have to risk your own capital. Instead of trying to blow up your $1,000 in the Robinhood, just practice in a prop firm environment, build consistency, build confidence, and then once you start getting payouts, put that money back in your live account and you actually have a big cushion to work with, and you're not stuck trading $1,000 on weeklies hoping you get lucky each and every week. The third thing I'd recommend also is having a job. The big thing for me before I really even started scaling my trading and taking, trading as a full-time job, is I always had some kind of side income or some kind of part-time job that was able to pay my bills and pay all my expenses while I was working on trading and developing the skill. So for me, like I've talked about in multiple videos, I worked at Kroger for quite some time, and literally half my Kroger checks were going towards depositing money in the stock market, buying shares, buying stocks. But once I got my account over PDT, $25,000 deposited, that's when I really started taking trading more seriously and I have to worry about the cash account, my $1,000 or for bills or anything like that. Having some kind of part-time job, side hustle, anything like that that can pay your expenses while you work on developing the skill is going to be greatly beneficial, and that's one thing I really took advantage of. Like I said, I've been a music producer. I was selling beats online. I was helping producers make websites, stuff like that. So I always had some kind of side income as I was trying to develop the skill and also make money elsewhere outside of the stock market. If you currently have no way to pay your expenses or pay your bills and you're hoping the stock market is going to pay your bills with your $1,000 account, that's where you go wrong. You need to have some kind of side income and slowly deposit money back in your account and build that portfolio up with your side hustle. And once your side income, starts to dwindle down like I did at Kroger, and once you start making more money in the stock market, that's when you can start to take your feet off the gas in your side hustle or your part-time job, and start trying to look to go full-time in the stock market when you have a large enough portfolio. And that's the biggest thing to understand. Having a job while you're learning trading allows you to build this skill, which is very difficult to do. You're not constantly, going through periods where you have no income coming in. As long as you have some kind of income, some kind of side hustle, and you can do that along with focusing on trading and developing the skill, that's the biggest thing to focus on. If you have no income and just hoping and praying that trading pays your expenses, too many emotions will come into play, and that's when you start taking bad trades, over leveraging, and blowing up your account because you have no income, you have no money coming in from anywhere else, and you're solely relying on the stock market, which is a difficult thing to do. So let's say you finally made it through steps 1 through 3. You built your your portfolio, you got to a comfortable size like around $30,000. You have a part-time job still where you're not solely relying on the stock market, and you also built up your confidence in the prop firm space like I talked about previously. Now we're on the step forward. We can talk about risking based on your portfolio size, and this is kind of how I do it. So once you get your account to around $30,000 above PDT rule and above 50K, now yes, you can use the cash account, but I prefer not to personally over 25K. Just kind of how I prefer. I don't like just trading with seller cash personally, but that's just me. Once you're over PDT, and like I said, around 30K, this is where you can start taking about $5,000 positions or $3,000 positions. For me personally, my sweet spot's around 10% allocation per trade. So for example, if I have a $30,000 account, I take 30,000 divided by 10, and that gives me $3,000, and that's gonna be my position size. And then on that position size, I'm risking about 10 to 20%. So for example, in a $3,000 position, I'm risking 10 to 20%. That'd be a $600 stop loss on whatever trade I'm looking at. And with a $600 risk on the trade, that means you're only risking about 2% of your portfolio per trade. Now, as you start getting more experience and more expertise in the market, you can bump up to like 3 or 4%. But even that's kind of pushing it for me personally. So like I said, the big thing that's worked for me, especially scaling my account, is taking 10% of my account, that's my max position size, and then of that max position size, I'm risking 10 to 20% per trade, and that allows me to only risk 2% of my account overall. Again, let me put this in a larger account size. Let's say you're at $60,000. Now once you're at 60K, your max position size would be $6,000, whatever amount that is if you're trading options. Then if you're trading options, again, a 10 to 20% stop loss would take that down to $600 per trade, or up to about $1,200 per trade, which is still within the overall risk parameters on your account size of 2 to 3%. You're not over leveraging, over risking yourself. Now, obviously, again, come to risk reward. I've made videos about this as well. If you're risking about $800 per trade on a $60,000 account, and then as you start getting up to these larger numbers, your risk reward has to be intact. So if you're risking $800 per trade on 60K, that means you should be looking to make $1,600 to $2,400 per trade to make the risk reward make sense. They're taking 2 to 3 hour trades and everything balances out. You could have 3 losing trades, losing $2,400, and have 1 winning trade, make $2,400, and you'll still be a profitable trader with a 25% win rate. Just put that in perspective. Now on to the next step here. You're starting to scale up, you're making big profits, you're making large numbers. Your mindset has to shift as you start scaling your accounts to start making more money. Especially for myself, I've been through this as well. As you start to scale up and start making more money, you kind of start to freeze up and start to hesitate as you start seeing larger and larger numbers on your screen. This comes with a drawdown as well. But I just started seeing like, $1,000 profit on my screen, $2,000 profit. But you may start doing dumb things and making emotional decisions just based off large numbers on your screen. That's one thing I had to really focus on this year in particular, is try to detach myself from the money and just focus on the setup. Because if I can focus on the setup and not get worried about scaling out wrong times, I'm going through some drawdown. That's where I start going through rough periods, or I'm overthinking, I'm going through drawdown, and I'm taking bad trades because I'm just focused on the numbers. If you can focus on your mindset and shift that mindset to stop focusing on the money and just start focusing on the steps and trading your step and trading your strategy, that's when you really start building your account, and that's when you really start taking more profits, because you're not focused on the number, you're focused on the strategy and the step in front of you. And the last thing here to focus on before you guys head off is size is earned and is not forced. Even on really choppy days in the stock market, I'll still size down and taking 4 contracts on my trades, 5 contracts on my options trades, because I know that there's no reason to be oversizing, overloading myself in choppy market conditions. But when I really see a great setup where the market's trending, that's when that's where I start to apply more pressure and start taking larger trades, because I've learned the skill of trading. I know where to take trades where they make sense and where to size up when necessary. But I also know how to identify when to size down and start taking less sizing contracts, or on risky days. Let's say there's like an FOMC meeting. Now I probably won't trade during FOMC unless it's a great setup. But again, same thing applies. You have to earn your portfolio size and earn the trades you're taking. You can't just automatically get $20,000 and start trading like you built that up yourself, because you didn't learn or earn that ability to trade that size, and you're just gonna over risk yourself, over leverage, and blow up your account with $20,000 because you didn't earn that kind of money you're trading with. Scaling only works if you're consistent at the base levels where you're doing and not at high levels. Once I got consistent, like I said, at 5 contracts, I got comfortable trading at that size for quite some time. That's when I started applying more pressure to 15 contracts, 20 contracts. Once I earned that right, and once I proved myself I can trade 5 contracts consistently, the only thing I've changed is my position size. And that just comes with understanding that I've proved myself I can trade this kind of contract I'm trading. And then now all I do is just trade the same setup, same patterns, same everything like that, just with more contracts and making more money in the trades. So if you're in the same position I was a few years ago, where you're stuck trading like 3 to 4 contracts, 5 contracts, and you're comfortable with that size and looking to scale up, hopefully this video answered a few of the questions you may have had, how I've been scaling up my trades recently, the things I've been thinking through, my thought process. So if you guys enjoyed the video, be sure to drop a like, comment, subscribe, and stay tuned for the next video. Peace.